Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to look at just one single stock that probably if you were watching the news in the last few days, you probably heard about it. Okay, but before we do that, I just want to say one thing. Things are busy, alhamdulillah, with family and work and so on, and it takes a lot of time to put these videos together. I would really appreciate if you can just give the videos a like, because it does help the channel. It helps the channel. It's growing, mashallah. A lot of people are coming on board. A lot of people are asking questions, and that's all we want to do. We want to grow and help, and that pushes me also to put these videos out there, because it gives me the motivation to do it. I'll be honest with you, because the more people kind of enjoy the videos and, you know, say thank you for helping us, whatever it is, right? And it kind of helps me say, you know what, I find out something, and then I'm like, you know what, let me share that. Okay, let me see what I'm sure a lot of you probably have seen on the news lately about this company I'm going to talk about today. You're probably wondering, is it good buy or whatever? So I want to give you my perspective, my opinion, and then give you the information. I go to like loads of different websites, get the information in one place so you can share it. Some of these websites I pay for, you know what I mean? So I would really genuinely love if you can just give the videos a like, subscribe to the channel if you haven't, because I think about 60% of you guys that watch regularly do actually subscribe to the channel. That 40%, if you are on that 40%, you haven't subscribed to the channel, I would really appreciate if you could do that, because it genuinely helps the channel. And inshallah, we can grow this and we can help each other. And sooner or later, inshallah, once I have a little bit more time, you know, in December, hopefully we'll get a little bit more time off with the family and so on, I will put out a lot more videos. And I'm planning right now, so inshallah in the next few weeks you will see inshallah a lot more videos. Right, so let's get started. The company I want to talk about today is this company, TSMC is basically Taiwan Semiconductor, is a semiconductor company in Taiwan, and what they do is a lot of these companies that you see on like Nvidia, like basically like Apple and so on, Qualcomm, Broadcom, they are not the manufacturer. What they do is they design the chip they want, and then they pass it on to TSMC. Then TSMC basically then creates that whole thing, right? So they are literally the manufacturer of every single chip out there for every single company that I've just mentioned, right? They might have a different designs, but they go to TSMC to actually do it. Hence why now the US are trying to diversify away from TSMC because of the situation that's happening in China, which we'll talk about later. So they trying to use companies like Micron, for example, in the US, and companies like Intel to actually have a base in the US, right? So that's why they're building their own factories now, so they can actually build and manufacture those chips in the US rather than away from the US, because of that risk that's going on in Taiwan. Okay, so yeah, so he bought $4.1 billion worth of shares in Q3. Now, when Warren Buffett does this, okay, it's not all about, oh, he bought it, let's buy as well. You now need to sit back and say, okay, what does he see in this company that we don't? Okay, and does this actually mean the tech companies are coming back? Does it actually mean it's a good time to buy TSMC or any other basically semiconductor companies? We will be looking at, so in maybe next couple of days, I'm going to look at an ETF called SMH ETF. We've done it before. That ETF is more or less Sharia compliant, I'll be honest with you, because all the companies in there are compliant. But the issue is it can change anytime. It's not meant to be a compliant ETF, but then naturally the companies are in there, 20 whatever companies are in there are naturally semiconductor companies. They are all Sharia compliant. So what I'm going to do is I'm going to look at it again, because we've done it a long time ago. I want to make sure that everyone knows about it, and then any changes and so on. So I will be doing video on that soon. If you like that kind of content, subscribe to the channel. So yeah, he bought $4.1 billion of worth. So what we want to do now is look at the financials and see what he sees in this company, okay? And then in long run, we'll see where we are. So as you can see, the portfolio, again, is just to 62,000. I added a little bit of money yesterday, bought a couple of companies, a couple of shares in different companies that I already own. There's no new companies. Everything is exactly the same. So 30 companies so far in this portfolio. The family portfolio, I think there's about 6 or 7 companies in there. But yeah, alhamdulillah, things are going okay. A lot of the companies are up. but 9%, okay, about £5,000 almost right now in profit. So yeah, we'll carry on with that. We're not going to touch anything. We're just going to keep adding to it. There's not even one single company that I'm thinking of selling anytime soon or anything like that. So we'll see what happens in the next few weeks, inshallah. I'll let you know. As always, I'm going to do actually a quick update video in probably this time next week Saturday, inshallah, just to give you what's going on with overall portfolio and what's happened this month. Right, so TSMC, if you can look at here, year to date is basically down 36%, almost 37%. When you look at the last 6 months, it's down just about 10.5%, just this month only. Okay, and a lot to do with the fact that people found out Warren Buffett was buying and then jumped in. And this is why I always say, you know what, be careful. If they have done their research, I'm happy for them, right? But be careful. Don't just basically buy the hype, okay? But it could be because Warren Buffett is buying. It might not just be a hype. It might, obviously, he buys his companies and he holds them for a long, long time, right? So as you can see here, almost 34% up just this month, and just last 5 days, I think it's just down a little bit. For this month though, okay, since October 27th up until now, is up actually really nicely. So at the time, I used to own this stock and then I sold it a long time ago. It was in free trade. I sold it. I couldn't buy it in trading 212 at the time, basically in my ISA account. So I had it in free trade. I wanted to move away from the free trade account, as well as the fact that the stuff that was happening in China I wasn't happy with. So I sold it, I think, when it was 110, 120, I can't remember exactly. But then since then, it's been going down and down every single week. But now it's actually bounced back. As you can see, that massive jump is just this month in November because Warren Buffett is buying. So let's have a look at the financials. Like I said to you, is the world's largest dedicated chip foundry. Okay, so they manufacture majority of the chips out there for all the companies out there that make these things. Okay, as you can see right now, it's $81 per share. It has an EPS of $5.53, market cap of 425 billion US dollars. Economic mode is wide economic mode, which is really good, obviously. And then beta is less than 1, which is really nice. That means it's not volatile. PE is very low, only 14.71. Price to free cash flow though is about 24. Right now, when you look at the sector has gone up to 26.48. So the technology sector has gone up quite a bit recently. In terms of dividend yield, we'll look about 1.76, 5-year growth rate of 9%. Dividend growth streak is about 3 years. Payout ratio only 30%, and the safety is about 62%. Free cash flow of $16.418 billion that they can use to buy back their own shares, to reinvest in the business, to pay off debt, to pay us as a dividend. Okay, they could do a lot of things with that money. Profit, we're looking about 42, almost 43% profit margin. Operating margins in the trailing 12 months, we're looking about 47%, which is really good. Return on equity, okay, 36%. This tells us whether the company management are actually doing well with the profits that they're making, the net incomes and so on. And total return in the last 10 years is, if you own this stock in the last 10 years, you would have made about 19%, almost 18.69%. Current ratio looking about 2.5%, or 2.5, sorry, which means current ratio basically tells us the debt level. So the company has obviously liabilities and assets, right? So based on that, the current assets are more than the current liabilities, which means if it's above 1, they can cover. Now they can cover almost twice over that liability, which is very, very good for the company. Growth estimates in the next 5 years, we're looking about 21.5%, almost 22% every single year. That's probably what Warren Buffett have seen. Probably two things that he's seen. One is this, and the other one is the price up, basically where the share prices are right now. According to Simply Wall Street, I don't think they like this, right? Fair value is 71%, and Simply Wall Street is actually saying 15% overvalued at the moment, which I completely disagree. It can happen, I'll be honest with you. It can go down, whatever. But I don't think it's overvalued, because this stock has been going down quite a bit. And when you look at the financials, it's heading the right direction. So I don't know what they see in the future. That is it the free cash flow? Is it slow down in the basically total revenue or the net income or whatever it is. I would like to know where that's coming from. But fair value according to Morningstar is $133 per share, and Morningstar's valuation is actually 38% discount. And this is probably what Warren Buffett has seen. After he's probably done his intrinsic value calculations, he's probably realized this company is very much undervalued at the moment, and is probably one of the most important companies out there that right now, as you know, the chip shortage and all that's happened in the last couple of years is probably going to be a good thing for this company in the long run, because all these companies that are creating their own, designing their own chips, they have to go to TSMC, right? According to TipRank, it's actually $99 per share, and that's just about 21% upside, and it's a strong buy according to them. Now here, the prices that you see, the currency that you see here is their native currency. Okay, $977 billion to right now 1.88 trillion Taiwan dollars. Okay, so you can see almost a double in terms of total revenue. In terms of gross profit, it almost doubled as well, 500 billion to right now 1 trillion, and that's their money, by the way. Okay, so it's not US dollars. Operating income is also doubled as well, 3.86 billion to right now 8.39 billion. And when you look at their net income, okay, 3.45 billion to right now $762 billion dollars. That's quite a lot. That's almost a doubling that net income. And then free cash flow of 500 billion, almost 2.5 billion, 250 billion, sorry, to right now $500 billion. So that it basically also doubled. So everything is going the right direction. So he's probably seen this, and projections are probably healthy and possibly going up in the long run. And that's probably what the reason he's seen, basically he's buying this for $4.1 billion of worth of this company. That says something, okay? Normally, when he does that, that means he's bullish on that company and so on. And the shares outstanding actually stayed the same in the last few years, okay? But obviously, it hasn't increased, but it stayed the same for the last 10 years. So they haven't increased it. They haven't bought back. But I think recently they declared that they will be buying more back of their shares. And the final thing we're going to look at is in terms of Sharia compliance side of things. So as you can see here, in terms of business activity screen is 100%, interest bearing debt 2.6, and interest bearing securities is 4.1. Now some of you have been asking me, I've done a video on how to calculate these things, but it is not really that difficult to do. You can go to Yahoo Finance or Seeking Alpha, you can find the information that you need. Okay, in terms of interest-bearing debt, right? So all you have to do, the total debt divided by market cap, and then obviously to find the percentage, you times it by 100. That's it. Total debt divided by market cap, right? And then that will give you a number that times by 100. That will give you a percentage. Okay. Same goes for the interest-bearing securities. That is the cash and cash equivalents. Okay, plus deposit divided by market cap. If you do that times by 100, it will give you the interest bearing, basically the percentage. And what Zoya and basically the AAOIFI standards say is 30%, less than 30% is good, okay, and 5% for the business activity. So less than 5, basically 30% or less than 5%, that's what they do. So if you're interested to find out a bit more, I've done a video a long time ago. I think, I can't remember exactly what it's called, but it is in this channel somewhere. I think how to profile your stocks or whatever it was. But yeah, so that's somewhere in this in the channel. Right, so there you have it. This is TSMC. Again, great company. What am I doing? So I am definitely not buying this right now. I'll be honest with you. And the reason I don't want to add is because I've got quite a few, basically, what are they called? Semiconductor companies in my portfolio. As you can see, I've got Broadcom here. I've got ASML. I've got, who else do I have? Qualcomm, I think, are somewhere. So I've got quite a few companies in there, and so I don't want to add to it. I don't want to buy more of these companies. And in fact, I had KLA, which I really like, and I had to sacrifice KLA because it was getting too much in terms of the semis. They were getting hit so hard, and then I had so many semis, and it was making the whole portfolio very volatile, so I had to get rid of that. So yeah, anyway, that is what I want to share with you guys. I'm going to do another video today as well. It will be released at some point tomorrow morning or so, about the S&P 500, the 5 companies that we've been looking at for each sector. I'll be doing that. I'll be doing another ETF, as like I said, about the semiconductor companies. I've got loads of plans that inshallah in the next few weeks. If you like this kind of content, please, like I said earlier, it takes a lot of time to prepare these things. I would really appreciate it if you can give the channel, just add to your list of channels that you watch and give the video a like. Have a wonderful day. Assalamu Alaikum.